Now, maybe you are a Tesla stock holder and you were very happy the last couple of days because something amazing happened. Now, if we are looking into the stock, then this chart looks absolutely insane. What happened here was a very strong gain of the stock, and we hit about $962 on the 4th of February, but then something happened. And what happened is very mysterious, because if you can see it, we are here at 962 on the 4th Feb, and just before the market closed, the stock went almost $100 down. This is called a flash crash, and it seems that someone put lots and lots of selling orders on a different stock market exchange to manipulate this. Now, if you want to know more about this, because this is super interesting, stay tuned.
Wolf of Dubai.
Now, I was scrolling through one of my favorite Reddits, which is Tesla Investor Club. I can just really recommend it. It's great for Tesla stockholder news. And I was scrolling, and suddenly I saw something like very concerning. What really happened to Tesla? Guess what? We should be over $1,000 right now. And I was like, what? Now, this is something that people who are invested in Tesla discovered, and we are rolling it into this vlog. Now, let's have a look what happened. Now, on the 4th of February, the stock of Tesla rose really high to $960, almost $970 per share, which is a new all-time high for Tesla. This is very bad for short sellers out there and also big institutions, because when there is such a run on a stock, lots of people gamble with options. Now, options are actually financial products that multiply the stock movement a lot, or can a lot, depending on the option. So let's say you have a stock that is $100 and then it gained 5%, then it's 105, but the option actually will take the 5% and will make out of it 50%, you know. So, but it's very dangerous product, because obviously it can go also the other way around. Now, these options are released by big financial institutions, by banks and so on, and obviously when they issue something, they have to cover it by shares, and when you are right with your options, you can make a lot of money. Now, imagine that the stock went up way over anybody's expectations, like it did on 4th of February, and the institution, the big institution, got really scared because they had a lot to pay out for investors. Now, having seen what happened then on the 4th of February, just before the market closed, the Tesla stock went down from almost 970 to 880, 870, so almost $100 flash crash. Now, this is not without anything. This is big money selling into the market to make such a drop happen. And if we are looking into the German Xetra stock exchange, which is one of the most electronic, or the most used electronic stock exchanges in Germany, then you see that over the whole day the stock was traded with very low volume. Like in Germany, obviously it's not the stock exchange where Tesla gets traded a lot, and then suddenly what happened just before market close, just before this 1,000 mark of Tesla, big money came to the market, and you can see how Tesla went down into the market. And this is how this could be manipulated, by putting big money into small stock exchanges that the price price drop dramatically, and people and the other stock exchanges see this, and obviously people get scared. Oh, what happened in Germany? A lot of Tesla shares get sold, so people are starting selling. Algorithms are starting to sell, and we see a flash crash like it happened on the 4th of February. Now let's see exactly what happened the next day. Now you can see the flash crash started in Europe, and just about 4 a.m. in US, when the stock exchange in US starting, the flash crash or the selling in Germany stopped and moved over to Nasdaq, to the US stock exchanges. And then you see in the upper part, if you see, it's just going smoothly, it stops and go directly into the US market. So you see that it couldn't be usually a European big investor in Tesla that was selling, because he would stay on the local market and just sell the stocks. But suddenly when the market in US opened, people wanted to pressure the stock further, and therefore you see huge sales also just taking over from Germany to US, and this shows actually that there is something not normal here. So the reason why this could happen is when big institutions are going into expiration of options, which would be that Friday of this week, then we would see this kind of selling to pressure the Tesla stock, and therefore not paying so much for the options of the people who are owning the options. This could be one reason. Of course, nothing confirmed, and this needs to be investigated. I have seen a lot of people and investors saw this as well and complained at the SEC, and this will be definitely investigated. Usually if you just sell I think 15 or 13 minutes before the market close, for example in the US stock, a lot and heavy, then and pressure the stock for selling, the next day you are not able to sell. And that's why it was quite interesting that the short attack, the bear attack, the flash crash was moved from Germany to Nasdaq the next day. And here you can see in the third graphic that the market, the pre-market got really pressured to $880, so about $100 flash crash. So let me know what you think, but this seems to be very interesting and very logical out there as well. Big options got really positive and would worth a lot of money that institution, banks would need to pay to those people. And I'm not saying that this was a manipulation. It could be a manipulation, so the SEC needs to investigate this and look for reasons why this happened. But very interesting what happened on this 4th of February. Another thing I wanted to talk about here in this vlog is also the recent fall of Tesla. Now, we lost about $160 per share, and actually if we are looking into other companies, growth companies of the time of the last decades, this is something that usually happens. Now also Jim Cramer told us about that this was very needed after such a run, that the stock goes back, relax a bit, and then goes back up. This is what we know from the future. If you're looking into this graphic, so you see Tesla went down $163. Netflix did similar jumps before, lost $165 and went back up 50%. Apple fall down $63 and went up 100% afterwards. And Amazon also lost about $323 and rose after that for the positive gains of 39%. Now, as you can see, so these pullbacks obviously are normal to cool down. It's something about the technicals that people and traders and people that are normally not long-term investors jump into the stock, want to take the gain, and goes then back out with some gain, or they get scared out of the stock when the stock pulls back. Jessica McMahon is a Tesla investor and find out something very interesting. According to the SEC Rule 201, the short selling of Tesla was restricted on the US market because since a stock falls more than a certain percentage, like over 10% on one single day, then the SEC regulates that you cannot short sell the stock to further push the price down. And therefore, since the 6th and 7th, the stock was restricted to short sell. This gives the stock a little bit time to breathe and prevent the stock to absolutely go down and further down. You know, SEC and stock markets are having this precautions in place, rules and regulation, automatic stops. You know, since the financial crisis, we have seen that, you know, there can be super big jumps of stocks to down, and most of it's because of algorithms, because of panic, and therefore there are some measurements and tools by the regulators to stop a stock for a certain amount, maybe a day, or even suspend the trading at all for 1 or 2 days, just that everybody calm down and just rethink their trades, adjust their algorithms, and everything cool absolutely down.